Maybe we could dig a little bit deeper on the evolution of crypto options specifically, because it's been quite interesting over the last couple of years, and I'm curious your read on this. So the way I see it is there's like three main buckets for it. There's the on-chain options protocols that have been trying to be innovated. There's the derivative version of it, which is a bit more of like a traditional, centralized version of it. And now we also have these, either ETF based options chains like, IBIT options, that sort of thing, as well as, options on crypto related equities like Coinbase, MicroStrategy, and now Circle as well. So yeah, how have you seen the evolution of that? Are we starting to see, more activity shift towards options and away from perpetuals now that there's more options available? And how do you think about those three buckets? Because, when I look at something like on-chain options, the spreads just look horrendous because the liquidity is just like not there. Derivate's been good. Spreads on BlackRock ETFs are really tight and nice, but there's obviously a lot of different ETFs. So yeah, what's your read on it?
Yeah, so let me break this apart a little bit. The one thing I'd say is that in the US, getting spot exposure to like even Bitcoin, Ethereum, and Solana is extremely hard. Like you're still paying 200, 250 basis points as a retail client to go to like a large, exchange to buy Bitcoin. It takes a lot to get there. And it's like, do you trust the custodian, or like, how is it being set up? Is it who's actually holding the assets? Are you putting like, there's a bunch of questions you're going to ask yourself. So even just getting spot exposure is quite hard, right? And then you're talking about derivatives, and you obviously the internet, like whether it's on chain, off chain, settled wherever it might be, you're going to have different problems with like market structure. So the one thing beautiful about the US equity listed options world, and I think there's like 12 to 15 exchanges out there, and they have like very mature markets there. They've been trading for a long time. And again, that's my old world where you'd see like everything from price time, maker taker, pro rata, like all these different market structures that are built to incentivize market makers to intercept a retail order. Like, so that's where the payment for order flow businesses come out of. That's where Robinhood makes half their revenues. And so the IBIT like options markets are going to be much better than like you're going to see in like, an on-chain options market. It's just not going to work because there's no real competition. There's no reason for the market makers to kind of like step up and give you a proper market. So like there's a bunch of things that like the retail client doesn't know, which is essentially the market structure will drive your prices. And if you have wide spreads and you're saying like, this is going to cost me a boatload to execute, you're probably not going to do it. I'm bullish of like getting more and more of our options in these like listed worlds. And so you're going to see these proxies to spot that are going to be really interesting in the US. And I like, again, I'm hyper focused in the US right now. I think there's a lot of opportunities globally, but I think that there's a lot to do in the US space. There's 4 exchanges in the US that make up 99% of the volume in spot, and Coinbase is 75% of that business. And I was lucky enough to be at the helm of that through IPO. We took it from 35% of US spot to 75%. Like, big moves. But the reality is there was no real competition. We probably could have taken it to 90% with not a lot of work, because we could charge whatever we want and nobody's keeping up with us. I think we now live in a world where there should be many exchanges in the United States that you can trade spot, and we should be competing on pricing and product and a bunch of other things. And my hope is that, like the stablecoin pie, this also fragments more in the US spot market, which is why we're building what we're building.